All right. Hello, Women in White Coats. It's Dr. Amber, and I have a special guest with me today, Shane Tenny, who is the managing partner of Spaugh, Dameron, and Tenny. And they have been giving financial planning. They're a financial planning firm in Charlotte, North Carolina, and they specialize in serving people just like us, doctors and dentists. And they've been doing it since 1957. So thank you so much for joining us.
Absolutely, Dr. Amber. Thanks for having me today.
All right. So we're going to get into some juicy things because there's a lot going on with legislation in regards to where things are for businesses, for loans, if you are a private practice owner, trying to figure out and navigate things. So Shane is going to talk to us about that. So first, can you just tell us about the recent legislation and really tell us how that can provide emergency economic relief for us as physicians, dentists?
Certainly, yeah, over the last month, Congress has worked in kind of record time across the aisle to try and bring economic stability to all of the uncertainty that we're feeling. There is not only a healthcare crisis going on, but there's also an economic crisis taking place that, of course, many of us and your members are aware of. And so Congress has worked very rapidly in just the last 3.5 weeks or so to pass three different pieces of legislation. And the most notable and the biggest piece was passed on Friday, March 27th. It's known as the CARES Act. And the CARES Act has been widely publicized as being a $2 trillion economic stability package aimed to provide solutions that touch almost every corner of the American population and business owner.
Okay. And let's get more into that because, like you said, there's been so many things going on. And as being a physician on the front line, we really haven't been able to really figure out all this stuff because we're trying to figure out, even when we go to work, how to do that. So fill us in. So the CARES Act, so you were saying it focuses on different levels. So as a doctor, what should I be paying attention to most?
Sure, and you're absolutely right. As you mentioned in the intro, our practice, we serve physicians all across the country, and the medical community is neck deep in trying to sort out how to respond to the healthcare situation in front of us. And at the same time, there's enormous pressure being placed on physicians, those in private practice, in trying to keep their practice afloat, those who are employed in finding the right role, the right capacity, their production, elective procedures are being cut. And so there's an enormous financial stress. And what we're finding is not just a healthcare pandemic, but an information pandemic, because our constituents just don't know what's going on and don't have the right information to make good choices. So with that said, I guess as a backdrop to your question about what should you be paying attention to, there's a number of really beneficial components of the bill that are worth paying attention to. Certainly out of $2 trillion, the federal government has carved up money for the airlines and the cruise ships and the big companies that help support America. But there's a whole tranche of money in there for individuals. And for physicians in particular, I think there's a couple elements to pay attention to. One is what has been, or what is called the recovery rebate. And the recovery rebate is this $1,200 check figure that, again, has been fairly ubiquitous in the news. And so for individuals with incomes below $75,000, there's a direct deposit coming your way soon for $1,200. For married households with incomes below $150,000, there is a direct deposit for $2,400 coming soon. Now, offhand, we think, okay, well, that's not really the physician population, but you and I both know that physicians don't start out making $500,000 a year, and so residents and fellows pay attention. There's some real dollars that are expected to be deposited into your bank account by the end of April. Treasury is working very quickly to bring that about. And so I think that's a really important thing just to be aware of. There is a whole student loan component as well. And so maybe you want to get into that, or I'll pause there in case you have other questions.
Yeah, because like I was telling you, so we were talking offline about this and how so many people are asking about the student loan aspect, because what you were telling me is that the student loans, it doesn't necessarily, the relief doesn't necessarily, the economic relief doesn't necessarily happen with all loans. It has to be certain loans, right? Can you tell me more about that for student loans?
Yep, for sure. So physicians are all familiar with student loans.
Oh, too familiar. I don't know.
Yep, that's right. Yeah, too familiar is a great answer. So
Yeah.
student loans come to generalize here, come in three different flavors. There's going to be the vast majority of student loans that physicians will take are loans originated by the Department of Education, or what are called federal loans. And in general, if you can go on the Department of Education's website and look up your loans, you have federal loans. The other two flavors would be some docs have private loans. If you went to a bank or got a private loan for living expenses or for other expenses during medical school or residency, you might have private loan. And then the third type would be refinanced loans. So if you've refinanced your loans in the last couple of years with an organization like SoFi or Common Bond or Laurel Road, then those would be also private loans. So with that said, the CARES Act does offer a tremendous benefit to holders of public federal student loans. And again, that is the vast majority of student loans out there. It does not discriminate based on whether your loans originated back in 2005 or in 2015. So whether you have loans at 2 or 3% from a decade or more ago, or whether you have student loans at 6 or 7% from the last couple of years, effective, I believe, March 15th, the federal government has set the interest rate on federal student loans at 0% automatically. There's nothing that needs to be done by the borrower. Your loans are no longer accruing interest, and that has been set to continue through or until September 30th. And so for about 6 months here, you've got a 0% interest rate on your student loans. As if that wasn't good enough news, they also have basically put everybody into forbearance until September 30th. So if you've been on automatic bank draft for your payments, or if you actually write checks, there is no payment due. There is no payment due. There is no interest accruing. Your student loans are effectively on ice until the end of September.
Okay,
Now,
so I know this.
Yeah.
This may be a weird question to ask, but would there be any benefit to still pay your loans right now? Or would you, I know every individual case is different. So would you say pay it now or just wait until September?
Yeah.
Different
You're
things.
right. I can't make a recommendation here, but I can tell you the differences. And there's a lot of benefit to just waiting. So by just not making a payment until September, your loan balance doesn't change, interest doesn't accrue, and effectively you're no worse off. If you do elect to make payments, which you can, then certainly those payments would go toward your loan balance or any interest that had already accrued. So making payments does continue to move your loan balance down. But it's really important to understand a key additional benefit about the student loan provisions. Many physicians are pursuing public service loan forgiveness as part of their loan management strategy. Yeah. Public service loan forgiveness requires 120 10 years worth of qualifying payments. As part of this loan forbearance program, between now and September 30th, even though there is no interest, and even though there are no payments due, the federal government is still giving credit to anyone on an income-driven repayment system for having made payments during that period. So effectively, you're getting 6 months worth of free credit towards public service loan forgiveness.
That's amazing. Yeah. So I didn't know that.
It's a really nice benefit. And again, something that any borrower of federal student loans should be getting a letter from Fed Loan Servicing in the next week or two. We've already seen these going out, letting you know all of this information. And in some ways, the best part of all, letting you know you don't need to do anything. So there's no form to do, no phone call to make, no web browser to go to. This is happening automatically.
Which is really good, because sometimes doing extra paperwork for loan stuff can be a little hectic.
It sure can. And the fact is, just incomes are under pressure right now. And
Yeah.
so I think it's just a small way to, take a little bit of pressure out of the checkbook each month right now.
Yeah, yeah. And so that's for individual student loans. And you also, we also talked about some things with, and the economic relief packages also take care of this too for private practices, or if you have a business, right? So there are certain things or certain benefits that you can get at this time too. And I know that one does require quite a bit of paperwork, if I remember correctly. Could you tell us about that?
Sure. One of the other key parts of the bill that's gotten a lot of attention is the financial funding for small businesses. Mm-hmm. And while most physicians don't go into private practice thinking, I want to be a business owner, you quickly realize you're a business owner, and so you are a small business. And so there are a number of things to be aware of and to be talking with your advisors, your accountant, your practice consultant about. Again, understanding that many practices right now are either closed or have seen a significant drop in revenues, either because of shelter-at-home orders or local regulations, or just because of a cut in elective procedures. The revenues are down significantly. And so you want to be aware of furlough and unemployment benefits that may be available to your staff. It may be an ideal strategy to furlough some of your staff. Now, furlough and unemployment are really closely related, but effectively it means we're not paying you. You're still you're still a hired person with benefits, and you are expected back, but we're not going to pay you so you can be on so you can qualify for unemployment benefits. Mm-hmm. However, a key part of the bill is providing capital to small businesses, including medical practices, to both operate and to make payroll. And so I'll take just a minute on those because this is where we've heard a lot of confusing information. There is a loan provision called the Economic Injury Disaster Loan, EIDL. I'll say right up front, this particular loan option is not one that we see a high fit for with medical practices, but it does exist. And so I want to talk about it. The EIDL loans are a loan. The repayment term is currently set at 10 years with an interest rate of about 3.75% or so. And it is a line of capital available to small businesses to keep operating. Okay. So if you have a practice that has ongoing costs, that may see an opportunity to upgrade equipment, that may want to do other things during this time, an EIDL loan would be for you. An EIDL loan is not the required or maybe the best course of action for making payroll. And that's the most acute issue that faces many practices today. So the other loan provision is what's called the PPP, Paycheck Protection Program.
Oh yeah, that's the one I hear a lot about. Mostly.
And that's the one that everybody wants to know about and you really should pay attention to. The Paycheck Protection Program is so attractive because it is built to be forgiven. I'll say it again, this is a loan that is designed to be offered to small businesses and forgiven by the federal government if they just meet the eligibility requirements. Well, what are the eligibility requirements? It's not complicated. You're pretty much taking out a loan for 2.5 months worth of your payroll expenses. And if you use it in the following 8 weeks after you get the loan for payroll expenses, the money's forgiven. And so that's a great source of capital to help practices that are finding themselves in kind of a drought of revenue for the next month or two while things hopefully return to normal and stabilize. So I know that was a long answer. Does that kind of help lay the groundwork for you?
Yeah, no, that was great. And so I know there's been controversy on where to apply for this, right? Some places say, well, okay, you can apply at Bank of America, but you need to make sure that you already have a Bank of America account, or they're not necessarily going to process your information and all that. Is that true? Have they expanded that? Is it certain places that people need to
It's a great question. So the EIDL loans, again, the one that probably isn't going to apply to most of the people listening, EIDL loans you would apply for directly through the Small Business Administration, SBA.gov. the PPP loans, you will need to start with your existing commercial banker. So whether your practice banks with Bank of America, SunTrust, Fifth Third, whomever, that's the relationship to go to first. And I will say there are billions of dollars available here, but it is a finite pool, and there are 30 million small businesses in America. And so I would definitely encourage any private practice owner, listening or watching this video, reach out to your advisors right away and open up the dialogue with your banker to see if getting in queue for one of these loans might be appropriate for you.
Okay. Now, if they don't have someone and they're looking for someone or a company just like yours, where can people find you?
Yeah, so if you don't have anybody to give you advice, we'd be delighted to field some questions. Our website is sdtplanning.com. And you don't even have to talk to anybody. We've got free resources on there. In fact, we've got a detailed blog that I just wrote at the end of last week. For anybody looking under the resources tab and blog, we've got an article. We've got detailed guides and downloads that you can access for free. Certainly, if you want to talk to somebody, you're welcome to fill out the little questionnaire, give us a call. And we'll be happy to talk with you about a little bit of what's going on and see if we can help. With regard to the lending specifically, our firm doesn't do lending. And so again, you'd want to go to your commercial banker, whoever handles your business checking account.
Okay, perfect. No, this was a lot of great information, because it is a lot of information that you have gone through, and thankfully you have been able to break down to us, at least as a starting point. So make sure you go, Women in White Coats, make sure you go check out their website. And we are so happy that you have actually answered a lot of our questions we've been trying to figure out, even with Women in White Coats. And we have a lot of entrepreneurs in the group too, who do things outside of medicine. So thank you so much for this, Shane. And we look forward to—
Dr. Amber, can I mention one other thing?
Oh, yes, go ahead.
Yeah. I was just going to mention one other thing that occurs to me that might be valuable in case there's any folks who are going to be job changing over the coming months or through 2020, residents, fellows, folks switching practices. One of the other attributes in the student loan provision is the ability for employers to provide up to $5,250 tax-free towards student loans of their employees. Previously, hospitals, practices, groups that provided a student loan stipend, it was treated as taxable income to the doc. Not anymore. For the balance of this year, $5,250 can be tax-free. I mention that because we're getting close to June, when folks will be finishing residency, finishing training, going into practice. I personally expect a lot of docs to be aware of this and to try and negotiate it into their contracts, or at least ask about it. So just a little tip for maybe forward thinking for those who might be job changing.
Yeah, and then I might ask my employer if they can figure that out for me now.
There you go.
Yeah, especially as you come up, re-up your 1 year after your contract each year, then that may be something just to kind of slide in there. Oh, that's great information. Okay, well, thank you so much. These were a lot of great pearls, and again, they have a lot of great information on their website. Can you tell us the website one more time, Shane?
Sure can. It's sdtplanning.com.
Oh, super simple and easy to find. All right. Well, thank you so much. And
You're welcome.
We'll see you again, Women in White Coats. And thanks again, Shane.
Thank you.